Hi guys, this is kbunschoten, the president and founder of Certum Solutions here in North Carolina. And I had a walk down memory lane recently with a client. We were going over how to measure financial reports, how to make strategic decisions based on your financials, and over a couple quick tricks that you can use within QuickBooks in order to run some numbers for yourself. As I did so, I remembered sending this report on common size income statements and financial statements. And I thought, it's been some time since I sent that. Let me go back and look at what I just sent this customer. I went back and looked and I went, oh my word, this one's not aged well. So this is version 2.0. This is a refreshed version of that video, which hopefully you will not be able to find because my next step is to go back and archive it. So today we're going to go over how to run common size financial statements, why they're helpful, also how to run statements that are grouped over time so then you can start measuring change. Now, I'm not asking you to learn calculus today, but it is nice to be able to see those changes and maybe even, we don't have time for that in this video, but look at the KPIs and how they change as a result of those numbers changing. When I'm dealing with KPIs, a lot of time I'm leaning more on the balance sheet than the income statement. But similarly, it's important that we know our income statement reflects the income that we're making appropriately too. So the balance sheet and our income statement really run hand in hand. And for some, you even pull in your cash flow statement. But again, I'm not going over that part today. So let's go ahead and jump in. Right now I'm on my dashboard and your dashboard could look just like this. It could look a little bit different. They just went through and refreshed and added a great left-hand navigation for some of our QuickBooks users. And when I'm here, you're going to look down at Business Overview. Some of these reports are kind of built out already. So this profit and loss as percent of total income, that's a common size income statement. Okay, that's really what it is. And then if you look at profit and loss by month, that's where we're doing it over periods, over a month. For today, I want to walk through the thought process behind these reports, and those particular groupings have not always been around. So I'm going to go ahead and show you how you can develop that yourself from a profit and loss statement. This way you can add your own little touches if you want, and you can kind of see how to work the reporting module within QuickBooks Online. So the first thing I notice when I click on my profit and loss is that the report period is this year to date. Okay, that includes a partial month. June is not closed yet. But when I'm talking about financials, usually what I'm referring to, I'm looking at smoothing financials, I'm looking at creating stability and making measurable impacts on the financials or taking that away. And when we're going through those processes to make sure that we have apples to apples numbers, when you have an unclosed month, that is suboptimal. Okay, so I have a report I run to measure my current month's activity just so I can go through and coach my team. It gives me some insight into certain parts of my business. That being said, when I'm actually looking at strategic planning, I typically am not dealing with month to month. The close hasn't happened yet if you have one. A lot of small businesses may not have a formal close, or it may be at the end of the year. Okay. QuickBooks does a lot of the heavy lifting for those closes for you, as does Xero and a lot of today's software. It's gone are the 6-column ledgers. I have done books in those. We won't talk about those days. So anyway, first I'm going to pick this year to last month. Then I'm going to say, you know what though? I really need some incremental changes through this time period so that I can measure and see where my numbers have changed month to month. And I'm not asking people to learn calculus, but I am going to say, let's see how those changes affect our KPIs. Let's see what KPIs are important to my particular business, because a number of KPIs to me is almost unfathomable. Finding the ones that really will make a difference to your business, I try to tell people to pick no more than 5. Okay, if you want, pick 10. But it's going to be a little inundating. We can run them through Python, like a Python notebook, and kind of simplify some things, or we can make some dashboards, that kind of thing. But all that being said, You don't want to inundate yourself with too much information because then a lot of times you get bogged down in the weeds and you're not looking at the stuff that's super important to your business. So that being said, I need to know how I'm going to break this out between months. So I believe we're under display. We're going to say display columns by, and I'm going to pick transaction date. A lot of this stuff has changed since a lot of my first videos that I did on this channel. And depending on your accounting software, you're going to do this differently. It's going to operate different in Odoo than it does in Xero, than it does in QuickBooks, than it does in Zoho, the rest of it, okay? But as long as you know where these buttons are, a lot of the functionality between these systems tends to be the same. QuickBooks tends to do a lot of sticky, added on services that arguably some of us really like and some of us really don't. There's sometimes I wish they would just stick to software and let me run my business. But that's what they're going for. They're trying to be the Amazon of software, and for better or worse, that's, you're working with that kind of thing. They change features a lot. And they change how you get to things a lot. So you kind of have to stay on top of that. That being said, it still remains the dominant software in the US market. So we're going to go ahead and run the profit and loss. Look at this. I now can see my P&L by month and how it's acted and behaved month to month. I can see that as I've started my business, my landscaping income, okay, is starting to grow. Okay, look at May. I'm really taking off, guys. So that all being said, you know what happens when a company grows is a lot of times, especially if we're not paying attention, certain expense accounts may grow too. And that may be good growth. It may be growth you want to catch. But the way you do that is to look at common size financials. But a common size financial statement is limited to one time period. It's not really, giving you a lot of perspective. You really want to measure it against something. And for this video, we're focusing on measuring it against yourself and how you've performed over time. In another situation, we may run benchmarks and see how you perform up against your competition or against others in a peer group. There's a lot of places to pull this kind of data, and we won't get into the weeds on that here. So moving down here, you get into your expenses, okay? And we can see all this, we can see this, and we can see the expenses. Our net income is growing, which is good. That's what you want to see when you're a growing business. At the same time, March was a lot smaller than February. Even if it's like couple $100, run with me here. Your numbers may be bigger, but it's the same idea. Why did it change? Okay, that's what we want to know. Other income, other expense, that's the stuff that really isn't related to our operations. I'm going to pay more attention to my continuing operations than I am the rest, but I still kind of want to know why this change happened here, and more so, are different parts of my expenses changing over time? And do I need to rein some of that in, or is some of that expected? If it's variable costs that's linked to your services, it depends. It should stay pretty standard in a common size financial. If it's not, if it's like a fixed expense, it may decrease. It may increase at certain stages. It just depends. So let's go ahead and let's see, is it under compare? We're going to see compare. So you can say year to date, which isn't going to tell me a whole lot because I imagine it's going to catch June too. Don't want to know that. Previous period, and you might for your own purposes, but for me, I don't. I'm going to pick previous period. In theory, each month will now be measured against the month prior, okay? The other one that I use a lot is previous year, so you can measure year over year. Has my seasonality changed? What is it about this that's going to change, okay? But for right now, I'm doing previous period. So I'm scrolling down here. We're taking a look at that, okay? That's super helpful information. Now we're going to click display again. Sorry, not display, compare. And we're going to pick previous year. You can have all of these, okay? The next thing I'm going to add is a percent of income. That's what makes this common size. On your profit and loss, everything's then going to show as a percentage of your income. On your balance sheet, you don't have an income account. So what it's going to track is a common size as related to your assets of your company, okay? So each one kind of has its one baseline that it's measuring against, and it becomes really helpful, especially if you're measuring it over time. Okay, so this file that I'm using for a sample actually really doesn't have a ton of history, but what I'm going to look at is over here, you're going to see percent of income. Gross profit is 100%. That's great. So let's see here. Cost of goods sold is 0, so that makes sense. If you had cost of goods, that's not going to say 100%. You want all this to be as based on your income. Okay. Then as you come down, you're going to see what percent. So this looks like their legal and professional fees for accounting were almost 50%. So I'm guessing that maybe they were doing some registration documents, maybe which technically a lot of that would be startup and it may be capitalized. So, but just go with me on this. Maybe they have additional accounting fees at the beginning. Okay. And then they don't have a whole lot, or maybe they're setting up a system real quick. Okay, and their cash basis. So it just depends. Anyway, you can measure all of this. What I like to do is then export this report to Excel. Why do I do that? Because I just brought in a lot of information and my computer has a kind of tiny screen and I have glasses. So sometimes I want to be able to hide columns, make columns bigger, that kind of thing. And I find that a lot easier to do in Excel. And you can actually also use Python commands in Excel for those of us that like to geek out on that stuff. Okay. Moving on from there. So I would then go ahead and hit this export button if I wanted to and export it to Excel. You can also export to PDF or CSV. If you're playing in a Python notebook for it with it, most people are going to use CSV, but again, as long as the Excel sheet isn't that massive, you can also use Excel for that. You just have to change your command or your script. So, but what I also want to do is it took me a minute to build this report. So I'm going to save this and I'm going to put common size. And really not only common size, but we did month over month. Okay. And I'm going to say this is only visible to me because that's what I want. So I'm going to save it. And there we go. And it looks like it was saved to our custom reports tab. Now, for those of us that are new, where is this? Where is this magical, mythical custom reports tab? Let's go here. So you go to reports, you go to custom reports. This little icon here shows that you can bookmark these items if you want. So I'm going to go to custom reports and look what I have. It's my mom report. I think from now on, I'm going to call it my mom report because I am a mom and I run that report. So we will move on from there. Next, I want to do a common size balance sheet. And this is something that you very rarely see. You don't see people working in the balance sheet a lot. Most of the time when I'm working with people that may have a new business, everyone's focused on the profit and loss. And I understand why, okay? While it doesn't really measure your cash flows, it does tell you, am I making money? Am I not making money? Okay. But this is the thing. The balance sheet is telling me how I'm growing my wealth. Okay. Or the company's portfolio value as an investor, or maybe even a creditor. This is going to be very important to me. The other thing that you have a problem with is if you're hyper focused on that P&L and things are being done incorrectly, or there's things being goofed up by you, your accounting professional, by anyone, because it's so easy to do, and you're not paying attention to your balance sheet, that stuff could sit there for years. Because the P&L is what's called a temporary statement. It closes out every year, and we've gone through this on an Odoo video recently, to this net income account, which then rolls into retained earnings. And I wish I knew who set up this file because the OBE, or opening balance equity account, gives me shivers. This is like super triggering right now. This is a sample file that came from the QuickBooks website. So luckily I can't say it was anybody I work with, but y'all, you've got to close this out. Everything will then eventually roll into retained earnings. So your retained earnings are the earnings that you've held on to. You've not distributed them. You've not done anything with them. It's kind of the wrapped up value of the business. Okay. Historically. So let's go ahead and run back up here. Okay. So here's our balance sheet. Let me hit display. And I want to display my columns by transaction date. Does this seem familiar? It should. You can also do, if you're growing rapidly or you want to just look at a larger period than a month. A lot of times I'll pick a quarter. Okay. I pick quarters for different reasons, but mainly if you think month is too granular, you do have that ability to say, I prefer not to run my numbers in months. I want to run them in quarters. Okay. Especially if you're established and you kind of know what you're expecting. So we're going to go ahead and do that. And now people are, a lot, you're looking here and I'm like, I can see how my stuff is changing. Here's your assets, right? They're growing. That's what we want to see. Okay. Now, your assets will change for various reasons. You might give yourself a distribution. There's several things that will pull away from your assets. Okay. But say that I want to compare this to my percent. Really, it should say percent of assets, but it doesn't look like it does that. Let's see if it does percent of column. They're not letting me do it as percent of assets. Okay, perfect. Okay, I was about to say, I kind of wish one would say percent of assets, like in the P&L it says percent of revenue. But it says that's what it's doing, because you can see here, total for current assets. Actually, it's only doing current assets, but that's fine. This will work. Total for assets. Okay, that's fine too. As long as total assets says 100, you've got your common size financial. So based on this, my assets are at 100%. My liabilities are 6%. That's super healthy to me. I'm going, that's pretty awesome. Okay, now I'm going to go down and look at my equity. 94% of this is within my equity. And what's funny is your liabilities plus your equity is 100%. Why? Because assets equal liabilities plus equity. I think I went over this in that one video about the accounting equation I did fairly recently, which will hopefully age better than my other one. In any case, you can also change your accounting method, especially if you're cash-based. However, even if you are cash-based, a lot of times I'll run reports on accrual because to me, even if it's not matching it perfectly, I kind of like to see when things were posted on an accrual basis versus cash. But you have to know it's not going to be apples to apples, and it's not GAAP, because if you're running cash-based books, you're not making the adjusting entries that someone that's running accrual-based books will be running. Okay, all that being said, I think we're coming up on 18 minutes, and I usually talk a bit at the end, so we're going to go ahead and stop there. I will save this report, and I'm going to say common size balance sheet. Okay, and I'm going to make it available to me only. It doesn't matter because when I log out of here, it's going to forget everything that we did today. But there you go. Now if I go over to reports and I go to custom, I now have my common size balance sheet, my common size profit and loss. And if I really wanted to be fancy, it used to be you could actually make groups, and I'm not seeing where we can make groups here anymore. Hopefully, here we go, add to group. Don't you love those new buttons? Hey, we moved it. We moved it. We were waiting for you to find out on your own. Okay. Or you can create a schedule, which I love because a lot of my customers, if they don't want to sign into QuickBooks all the time, I have this problem with a CRM I use where I just wish it would just send me the dang report, but they want you to go into the dashboard and run it yourself. Well, I don't want to run it myself. I have a business to run. So you can create a schedule. You can send it to yourself. Okay. You just create a workflow here, schedule and send. When do you want to start this? How often do you want to send it? When do you want to end it? And then what do you want the email to look like? Okay, I do that for my clients all the time because when you send those reports, it gives them that read. The one thing I do tell them is if I haven't closed the books for that month or my team hasn't closed the books for that month, you're going to see some variance depending on what we do when we close your books and we review everything. In any case, I think that's a good spot to wrap up. If you have questions about this video, if you need some business consulting, accounting, cost accounting, any of that done, or you just want to talk because I did a decent job on a video, because I would love that. I actually read all my comments. Please go ahead and leave me a comment. I should always have probably in some spot in this description, there's typically my email address too. I welcome emails. I'm more than happy to talk through your situation. I love talking to people. I hope that this is helpful to you. I will talk to you again soon. Thanks so much for watching, and I hope you learned something. I hope that I brought some value today. Bye.